You're back to the Hope Global Forum annual meeting 2020. America on Reset, Healing a Nation, Opportunity for All. We're being joined by a new friend of mine, the acting comptroller of the currency, U.S. Comptroller of the Currency, Mr. Brian Brooks. He's the administrator of the federal banking system. The OCC supervises nearly 1,200 national banks, and I think the number is over $12 trillion. He'll correct me, but it's a lot of money. It's 70% of all the banking network in this country. And before I get into asking him to say a bit about his background, he has also this fintech background. I think it's pretty cool and appropriate for the moment. We got some exciting stuff I think we're going to share with you today about what he's doing also with Project Reach. But stepping back for a minute, the OCC, the Comptroller of the Currency, was part of history. We had the Freedmen's Bank after the Civil War of 1865. Abraham Lincoln, after the Civil War and after the Emancipation Proclamation, called for a bank to teach freed slaves about money, to give them a domicile for their savings. These were Union soldiers who were taken advantage of by that day's equivalency of a payday lender, a check casher, a rent-to-own store, a title lender. They'd come to the camps, these payday lender predators, and so the Union soldiers who were black needed some protection so they could make sure their savings were secured. And so Abraham Lincoln created this bank, inspired by a black minister out of New York, by the way, called the Freedmen's Bank. It's part of the Freedmen's Bureau. And unfortunately, Lincoln was killed the next month. Lincoln had called for 40 acres, a mule, because blacks were so industrious, they worked so hard. And then the bank was meant to sort of domicile and hopefully finance at some time the uplift of a black race. And that whole, I call it the memo, that memo was lost. We've still managed to come up from nothing, my new book and my new message. In the OCC, that was an OCC bank, the only time Congress ever chartered a bank. And so you guys have played a long history, Mr. Brooks, in directly, indirectly in the uplift of people who left behind. And I'm fascinated that you see yourself today playing that role. Can you tell us a little bit about your background and why that makes it appropriate for you to bring high tech and high touch and the empowerment of those left behind into view? Welcome.
Well, absolutely, John. And listen, thank you so much for having me. This is one of the great platforms for having these kinds of discussions, and I know that your audience is a unique one, so it's a real honor to be here to have this conversation with you. You know, your history of the OCC going back into the Civil War and talking about our resolution of the Freedmen's Bank, because the part of the story I think you don't fully tell is the idea that the Freedmen's Bank, which was set up to benefit freed slaves, was largely kind of looted by some of its owners back at the time, and the
That's
OCC
right.
stepped in
Glad you said it.
to recover money for the African-American customers of that bank, shows that there is a long tradition in this country of minorities in particular getting scammed by the financial system, not having a lot of trust in banks to actually serve their interests and their needs. And the OCC is here to try and redress that and to try and build trust where trust has been broken. So, you know, when you talk about my personal background, I came from a background that, you know, different in place and different in race from your own, but a little bit like your own, as we've talked about, one-on-one. Yeah. I came from a small town in southern Colorado that was a majority Hispanic county. It was a steel mill town. It was the only industrial town in the state, you know, and my great-grandparents had moved there from the old country to work in the factory. And when I was growing up, John, as in a lot of America in the early 70s, the local industrial economy basically died, throwing, you know, tens of thousands of people in this small town out of work. It was a town of 100,000 people, 25,000 of them worked at the mill, and everybody else was either married to or had a child or a parent or served somebody who worked at the mill. So that town died. It still to this day has 20% unemployment, and the average house cost in that town is about $60,000. 13% of people in the town went to college, et cetera, et cetera. I was one of those kids who was only able to make a life for myself because finance was available to me. So I took out a lot of student loans to put myself through college. I paid an 8% rate of interest that was not tax deductible at the time. And I came to really not only learn the value of a dollar, but to learn the value of credit. And I think the lesson that the OCC tries to teach, and certainly, in my tenure here, we've tried to preach, is the idea that responsibly managed credit can be a great thing as people try to climb the ladder from wherever they started. So, John, you and I both came from very humble beginnings. But what was great about both of us is we had two things. One is that we had amazing role models. I always remember you're telling the story of the banker wearing the suit and tie, and you'd never seen somebody wearing a suit and tie, and that showed you that you could be that guy. Yeah. I had a very similar experience growing up. And then the other thing we've learned is that you need to have bottom rungs on a ladder if you're going to climb the ladder. You know what I mean? And so we don't do people any service by sort of paternalistically saying you shouldn't have credit because you've had a ding or two, and so it might be a little bit more expensive. What we want is responsible credit that is sustainable, that can be reasonably repaid by people. But to get on a ladder, there's got to be a couple of bottom rungs. And so that's, kind of how I got here.
Yeah, and one thing that you have not said that I'll say on your behalf, and this is applies to you and applies to your predecessor, Comptroller Otting, who is also a good friend. My white friends, Doug McMillan taught me this story. My white friends never have to think about being white. My black friends think about being black every 28 seconds. It's exhausting. We're reminded of it all the time. We've got to be twice as good, twice as sharp, twice as intelligent, get up twice as early, stay up twice as late, work twice as hard. And we've been doing so much with so little for so long. We can almost do anything with nothing. But still, there's this gap because we don't have the relationship capital, because we don't have power that wakes up in the morning thinking about us. And so that's why these conscious efforts are so important. And you have taken your life and you could have checked out. You could have done, you were involved with technology, fintech specifically. You could have just gone off into that world and just spun into oblivion and never touched these topics. But you're holding meetings twice a week, every week, since I've known you, on the invisible class. Why? Why do you care?
Well, John, I am very worried that we're in a moment in our society where issues of inclusion and diversity and just race generally have become so politicized that it's almost impossible to talk about them anymore. There's an idea that either Democrats or Republicans are on the right side and the other party is evil or whatever. My basic viewpoint is the way to take politics out of this discussion is to say, hey, we can agree to disagree on whether people whose families immigrated to the United States decades or many decades after the end of slavery have some responsibility or don't have some responsibility. But we can at least all come together around the notion that the numbers don't look good. So your point about how black people in particular have to work twice as hard, that's true. It's just objectively true. And so my feeling is, if I can help lead from my side of the aisle, at least on the message of, hey guys, if we were conscious of these numbers and if we took proactive steps to make the numbers better, then we can at least redress the vestiges of our legacy of slavery and our legacy of Jim Crow in this country. And so the reason I'm having these meetings every week is to say, hey, you might be a white person who doesn't believe that you are a discriminator and you don't think you're a racist, and I'm not here to tell you whether you are or aren't. But what I am here to tell you is, if I work in a place where 4% of the workers are black and 20% of the labor force is black, that's a problem.
And if I'm at the bottom of the rung of the whole scenario.
Yeah, exactly. John, one of the things we're working on together is this idea that 45 million Americans don't have a credit score. And if you're black, you are more than twice as likely to be one of those than if you're white. That's a problem.
That's a problem. And it's a problem for America, not just black America.
Correct. The market would be bigger if black people and all of their talents were fully engaged and fully available and fully remunerated. That's it. It's in everybody's interest that this be the case, whether you believe in social justice or markets. We all should share the same outcome.
So, Comptroller, I want to come back to this initiative. But, one thing I love, one of our guests later today or tomorrow will be Melody Hobson. And Melody has this great quote that she loves math because it doesn't have an opinion.
Exactly. That's a good line.
And what you have tried to do and Otting tried to do with CRA reform, I want you to talk a bit about that modernization, we call it modernization, with making the data live and making the data the truth. It is about the math, isn't it? I mean, it's applying data to something that's making something that's subjective more objective, and making everybody subject to the data of whether you hit the mark or you didn't. Why don't you get into that a little bit? Have I explained that properly or not?
Yeah, no, I think that is absolutely terrific. So the way I think about it is, unfortunately, the way the human brain works, John, is that ideology trumps data every day of the week. Narrative trumps data every day of the week. And so what we've seen on Community Reinvestment Act is the following thing, and I think it's a problem. And we've got to counter our natural impulses on this. The idea that my predecessor encountered when he tried to reform the Community Reinvestment Act was, there's an idea that CRA is a civil rights law. There's an idea that for a period of the 20th century, Republicans were generally seen as hostile to civil rights, and understandably so. And thus there was this belief that this old law shouldn't be touched by a Republican. I think that was the surface level debate when Joseph Otting tried to reform CRA. But here's the problem. The data showed that once banks started pulling branches out of poor neighborhoods because they didn't think branch banking was a good business model, money stopped flowing, particularly to African American and Hispanic residents of inner cities. Now, you can say all day long that you think CRA should only be touched by Democrats, but right now, the money isn't flowing where it needs to go. It is very hard if you're an African American entrepreneur in Baltimore or Philadelphia or any of a series of other places to find a loan, because there aren't any bank branches. And until we did our CRA reform, the only incentive banks had to lend were around their branches. And so we've tried to fix that by saying, look, we're going to take out any issue of politics, any issue of who's getting the credit. All we want to do is hold banks accountable for lending and investing wherever they gather a majority of their deposits, regardless of whether they have a branch there or not. So if you are borrowing money from African Americans who are making deposits in your bank online, let's say, you need to reinvest some of that money where those people live. That's common sense, right? That's not political. So we have to come back to outcomes matter. It's not about the ideology. It's just about, is money flowing where it's needed or not? And CRA reform is designed to make sure that it does.
As one of my mentors said, if there's an end to the story, can we please start there? The point I'm hearing, the point I hear you making is, and by the way, one part of this is, if you're a digital bank, an electronic bank, you didn't have this requirement before because you just had to serve around your branch, even though it was just one branch in Idaho or someplace, but you're making taking in deposits across the country. Under the refined act, you got to now be CRA qualified. Community Reinvestment Act, by the way, people. You got a Community Reinvestment Act responsible wherever you're taking branch deposits.
Absolutely.
That's right. Okay. So you're saying there's going to be more capital coming to underserved neighborhoods, particularly black and brown urban neighborhoods and other white rural neighborhoods as well, but there'll be more capital coming as a result of modernization than before.
Absolutely. And so listen, John, I've been traveling the country even during the coronavirus pandemic to make this message heard. So I have spoken to African American bankers in Charleston, South Carolina. I have spoken to the biggest Native American bank in the country, based in Denver, Colorado. We're working on an event in rural Kentucky. The point is to go places that have not been served and bring together bankers and entrepreneurs and borrowers and community leaders to understand how this law works to direct capital to those places. And if I have to expend every last inch of shoe leather that I've got showing people how this works and making those deals happen, I'm going to do that. And I know you are too. That's your whole point about, this sort of silver rights idea. Yeah, people can be empowered through opportunity.
Yeah, and I want to pivot to Project Reach here in a second. I don't want us to run out of time before we get to that. But I want to make this clear. I became a believer in this, not because you and Otting talked to me about it. I became a believer because I've had my own challenges with aspects of the administration. I became a believer when Grovetta, the highest ranking African American at the OCC, whose great-great-grandparents were slaves and who grew up in a poor neighborhood with shotgun shacks, when she put her reputation on the line and said, John, I'm doing this for my ancestors. Well, I'm done at that point. if she's putting her own legacy on the line. And what I'm hearing you say, bottom line is, you're putting your reputation on the line and saying the data and the transparency should produce more capital where it's needed in underserved neighborhoods, including Native American Indian reservations, as I understand it. And if it's not, hold you accountable. That's what I'm hearing.
Yeah, listen, judge me by my results.
Done.
You know, judge me by my results. I mean, we need to work together. You know, I've told you this before, John, but like my mentor in the law was the most famous African-American lawyer of his generation. And one thing he taught me was all of the great ideas aren't going to come from the same race or the same gender. So I'm prepared to be judged by the results. And if we get this wrong, make me fix it. Okay. But leaving the status quo in place when it wasn't working for 25 years, life's too short for that. We only have one life to get things better, and I think we can work together to do that.
Well, mind you, it was working for 25 years, but we want to make it work better. And I mean, imagine not having a software upgrade on your iPhone for 25 years. I mean, I get a software upgrade on my iPhone every 6 months. So you're just doing a software upgrade, as I understand it, on the statute.
Yeah, that's right. But imagine if you missed the last two software upgrades. I guess that's my point, is when banks went fully online 10 or 12 years ago and they started pulling branches out, that's when it really stopped working, and we should have upgraded this earlier, would be my view.
So let's move to something that I think everybody can agree on, is Project Reach, which again, I think it's it's fabulously a little nuts that a comptroller of the currency, this is not, you don't have to do this. You could just skate. You show up to work, in late, long lunch, leave early, and be done with it. Nobody would say a word. Why do you lean, what is it? What's Project Reach? And why is it so important to you?
Well, so first of all, let me tell your viewers what it is. So Project Reach, which, John, you were a founding partner of, and I'm so grateful for your leadership on this, is a consortium that stands for the Roundtable for Economic Access and Change. And the idea is, look, philanthropy and charitable giving in the wake of the George Floyd protests, those are great. But at the end of the day, when the protesters go home and go back to work and winter sets in, that kind of comes to an end. That's not sustainable. What we need to focus on, I think, if we're going to solve the root causes of what we're looking at now, is we need to look at structures that are keeping some groups of people out of full economic participation. And that's what REACH is all about, is finding structures and fixing them. So the three things, as you know, that we're working really hard on are A, solving the problem of 45 million Americans, largely Black and brown Americans, not having a credit score, which means that they have no access to mortgage capital, small business loan capital, et cetera. It means solving the 20% down payment problem, which means that people who didn't inherit money for a down payment have a disproportionately hard time buying a house. And who disproportionately doesn't inherit money? African Americans. Okay. And then solving the problem of minority deposit institutions, the number of which has gotten smaller and smaller every year over the last 10 years. And yet, coming back to the trust point where you and I started, MDIs are key to trust building in their communities that have been scammed by non-minority banks in the past. So we got to fix those structures. And you ask, why do I do this? It's because, look, I don't know how long I've got in this job, but I didn't come here to warm a seat. I left a job and a happy career because I had a period of time to make a difference. And I would just say anybody who does that is going to be well motivated to write their name in the history books and do something that matters. And I think, John, we can do that together. I really do.
You had me at hello. I massively agree with you, and I think you've got some announcements coming out soon around when he says MDI, it's codes, it's minority depository institutions, banks, CDFI, certified, community development financial institutions. That you got some things coming out here soon that are results oriented. That I won't say now, but we'll wait for announcements on that. You got something coming out on the down payment assistance piece. And I want to thank Steve Steinauer and Huntington Bank and others, and Wells Fargo and others for leaning in on the thought leadership there. And then you've got on the credit invisibles piece a lot of work around that to get people to a point where they are visible to the market. Things like credit data that just doesn't show up. You're going to make sure that gets credit. Am I clear about that?
You're exactly right. I mean, listen, the problem most people have who aren't in the credit system is they make all their payments on time. They're just not the right kind of payments, right? So if you make your mortgage payment on time, you get credit for that. But if you make your rent payments on time, that doesn't get captured historically, right? We're building with Credit Karma and Plaid and a couple of the big credit bureaus and others a new credit score for people who don't have one that will give you credit for all of that behavior.
Credit for credit.
Correct, exactly.
So we're wrapping up. We're running out of time here in a moment. But you said something earlier I want to underscore. 30% of white households benefit from generational wealth. In other words, they get an inheritance. 30%. Think about what a head start that is.
Right.
It's almost non-existent for a black and a brown family, certainly their black family. And so you're already starting with a deficit. And then we've seen the city report that showed that in the last 20 years there's been $16 trillion of lost GDP based on discrimination to blacks alone. And we just knocked it off right now, just knocked off racism, discrimination right now, just to blacks. You find another $5 trillion of GDP in the next 5 years, which would pay for all the COVID-19 stimulus, by the way. I commend what you're doing, Comptroller. I think it's in the legacy of the Freedmen's Bank, in the legacy of what happened when one of your comptrollers got a Nobel Peace Prize with war bonds, I believe it was, or restructuring some of the war debt. And it's in the legacy of what we're in now, of this third Reconstruction, where we need everybody leaned against the wheel to try to get people into the economy and producing for this country. Thank you.